MarketStrategy.com.
Hello, this is Daniel Grady with a brief look at the markets for today, Thursday, December 5th. We'll start with a look at the economic calendar, and at 12 o'clock GMT we have the Bank of England interest rate decision, which is a major event for the day. This will have an impact most likely on the pound and on British stocks. Then the next event is at 12:45 GMT, when we have the European Central Bank interest rate decision is going to be announced. This is followed by a press conference by the ECB President Mario Draghi, which will explain the criteria of the interest rate decision at 1:30 GMT. This is also a major event that investors will be focusing on. At the same time, at 1:30, we also have the United States GDP data coming out and personal consumption. And that's it for major events scheduled for today. Moving over to the markets, the S&P 500 had experienced some volatility yesterday, but eventually closed virtually unchanged. The Asian markets are down across the board, mostly in expectations that the Fed might begin its taper sooner than expected. Futures for the S&P 500 going into trading today are also pretty much unchanged, and we're seeing an environment where investors are keeping their funds out of the market in anticipation of the major risk events coming up today and tomorrow. The euro yesterday it came down to 135.35, important support level, and then subsequently bounced back up above 136, and is now trading below its next resistance at 136.50. We still have support at 136, but the ECB rate decision could have a significant impact on this pair, and we could see a lot of volatility during the day. A similar case we have with the pound, which is also expecting a rate decision by the Bank of England. It's been trading near or around 164 for the last couple of days, and depending on what will happen with Bank of England, we could see a strong move in the pound-dollar pair. That's not the case with the United States dollar versus the Japanese yen, which we don't have any major data except for the United States GDP coming out later, which could affect this. However, it appears that we've definitively entered a correction phase after this strong move that's been maintaining since the end of October. It's currently trading below previous support, now term resistance at 101.30, and it's hit its first retracement. The first retracement Fibonacci level at 101.90. After that, we have support at 101.30. Then gold had a pretty good performance yesterday, rising the most that it has done since early October. This was mostly in response to dollar weakness following ADP jobless data that was posted yesterday. This could be the beginning of a correction that could see it rise as 1,270 after this long move that it's had on the downside, but this will depend mostly on how the dollar will perform and what we have with the non-farm payrolls coming out on Friday. And that's it for today. Thanks for watching, and happy trading.